Good morning, everybody. Welcome back to your weekly Southwest Florida real estate market update. My name is Braden Milner here with the Milner team at Florida Future Realty. Just wanted to go over just your weekly market stats updates just like we do every single week. Today is Monday, September 22nd. We're right about 85 degrees right now in Cape Coral. Today it looks like the high is going to be about 91, the low in the evening that's the field temperature. The low in the evening 75, so we're getting down a little bit. It's still definitely hot. Some of you guys that are up north are like, man, 90 degrees, like that sounds hot. But for us, it's a little bit cooler than like when we're getting, sometimes mid 90s in like the middle of the summer. Mornings are starting to feel a little bit of a fall breeze. We're getting some wind coming in from up north, so it's definitely starting to shift a little bit. I think 2 days ago or something was the official last day of summer, so we're definitely going to start seeing that nice fall winter weather coming soon. Just that nice 50, 60, 70 degree weather all throughout the rest of the year, which is going to be very, very nice. Moving along, mortgage rates. So as you guys can see in the title, we did get a rate cut at the Fed last week. So they dropped rates by, I believe, 25 basis points. So nothing too crazy there. That's just essentially one small rate cut. It was already kind of priced in, as you can see here on this chart. Technically, the rates have actually went up this week. I don't know if they were pricing in potentially, 2 rate cuts and they only got one. But as you can see here, 9/16, the average mortgage rate was about 6.13, and today the average mortgage rate's about 6.35. However, definitely a lot better than, May, January, when we're looking at, mid to high 6s, 7s, that kind of thing. One of my mortgage brokers is actually getting FHA buyers right now, well-qualified FHA buyers in the mid 5s, and if we can get rate buy downs and stuff as high as, or as low as 4.99 to like the low 5s. So sellers are still definitely negotiable. We can get those credits, we can get those rate buy downs, but we're definitely seeing like a lower starting interest rate, which is definitely really nice. As we talk about this, these interest rates are going to track this U.S. 10-year Treasury bond. So this is basically like what the government sells bonds to other countries. As you can see, as this goes up, the mortgage rates essentially increase based on that as well. So even though we did get a rate cut, the actual price of the return of the bond yield's gone up a little bit. So there's a spread in terms of the mortgage rates, because if the bank just wants to make 4%, they'll just go ahead and buy government bonds. They're wanting to mortgage on properties and make a little bit of a difference instead. So that's why we see like this is at 4% and the bank's rates at 6.5, 6, whatever. They're making about like a 2% spread. So this is definitely something we want to keep an eye on. This is about the last week that there was rumors that we were going to get a rate cut. This treasury yield was down, and then now we're starting to go up a little bit. So we're definitely going to watch this. Even though they're cutting rates at the Fed, that doesn't necessarily mean that the bond returns are going to go down. So we'll just have to obviously monitor this, and hopefully we're going to start to see this continue to drop. This is a sign that, America is doing good long term. If we start to see these lower bond yield rates, basically people are like, hey, we're going to invest in America, it's safe, all that kind of good stuff. But as this number starts going up, it's a riskier and riskier investment, so investors want to make more return. But that's kind of where the mortgage numbers come from, is just this US 10-year chart. Moving on, let's look at some actual stats now. So as you guys can see here, we're going to be looking at single family homes, condos in Lee County, so Cape Coral, Fort Myers, North Fort Myers. That's our primary market. We do serve all of Southwest Florida, all the way up from Sarasota, all the way down to Naples. But our primary market's right here in Lee County. So this is what we do the market update on every single week. So as you guys can see here, median sales price is a little bit on the lower side as compared to this past year or so. So for the most part, we've been hovering right around 335,000 as a low, and we've gone all the way up to 412,000 as a high. Over the course of this year, these last couple weeks, we've been hanging right around in this 330 to 350 range. So definitely the average median sales price has gone down. Throughout the beginning of this year, it's kind of seems like it's narrowing, but we're definitely going to want to keep an eye on this. If the prices are going to continue to drop, or if we're going to see leveling out, or prices, rise with these rate drops that we've been getting. Closed sales, this is going to be the number of sales that have actually closed, so not new listings, not pending sales. This is actually properties that have sold. This is down a little bit as well, which is a little concerning. So even though we are seeing those rate drops, even though buyers are re-entering the market, we're seeing homes going pending, but we're not seeing all of them close. So there's definitely some kind of drop off to where not all of the pending sales are closing. So that's definitely something that we're going to want to keep an eye on. But the last couple weeks, we've been going down in closed sales. We've been going down in new inventory as well. So we've kind of been at a little bit of a balanced market. But as season comes, more people are going to want to start to put their homes on the market. We're definitely, chances are, going to start seeing more inventory if we don't start to see these more pendings and sales take place to account for that. Average sold price per square foot, we're looking at 209 right now. So as you can see, over the course of basically the last year, it's just been kind of a steady decline. Looks like we're potentially kind of at a bottom here now, right around 203, 203. So there's a couple weeks with 203. So we might see this rise again, or we could continue to see this downtrend over the next year, but we're going to continue to keep an eye on that. Percent of list price received. So this is going to be the percentage of the list price that a seller receives on the listing. So not the original price. This is going to be the last active listing price. It's at about 95% right now, so buyers are pretty much banking on at least a 5% discount. So if your house is listed for $300,000, you're probably going to be looking at, $315. You're going to be at least that 5%, $15,000 discount. If we go over here to the percent of original price received, this is right around 88%. So you're going to be, just factor in about a 10% discount based off of your original listing price. So this is definitely something to keep in mind. Buyers are definitely wanting to get deals right now. They're definitely wanting to get money off the listing price and get money off of the original price. However, you as a seller still have to, you want to definitely price aggressively to make sure that your home is within that range of selling. But then you also want to keep this in mind where definitely buyers are going to ask for money off of the price. So you don't want to be, listed an absolute rock bottom dollar to where you don't have anywhere else to go. Cash sales, this is definitely something we're going to want to watch as well. So this is going to be the percentage of cash sales that are taking place in our market on a weekly basis. So this has actually been kind of leveled out between 30% and 40% for the last couple weeks. This last week closed at 38.5%. So we're going to want to watch this. If we start to see, rates adjust at all, this is going to be something to monitor, because as rates drop, we should start to see a lower percentage of these sales being cash. Financing is going to make sense to, more people. But if this continues to go up, it definitely means something's wrong with, financing and affordability. And then we're going to be seeing a lot more cash sales, which is investors, lower offers, quicker closings, rental properties, those kind of things typically. Sometimes, though, it is, just people who are retiring, moving down, they got cash, buying a retirement home. But a lot of times these, these can also be, like rental properties and investments and things like that as well. Average days on the market for closed properties is 64. So we've definitely been going up over the course of the year. However, as you can see, pretty much anything that's selling is still within, 60 to 45 to 60 days probably to get an offer, as long as you're going to be well priced, well promoted, all that good stuff. If you're overpriced, it's going to take longer. If you're not presented well, it's going to take longer. If you're not promoted properly, this is going to take longer. So any of those things that you can do to, fix this, we can definitely cut into that average days on markets. This is good for buyers. Buyers are going to get, a lot of different options. There's going to be more inventory on the market, a little less speed required to be able to secure things. Take your time, compare your options, all that good stuff. List to close days, this is going to be the full entire contract process. So that's going to be 109 days. So as you guys saw, it was about 60 days on average for the accepted offer, and then it's taking about another 45 to 60 days to close. So a lot of those could be financing people. It could potentially be home content, like the contract contingent upon the sale of another property or something like that, to where these people are needing 45, 60 days to close after they get a contract. New listings. This is definitely something we're going to want to watch. So the last couple weeks we've been pretty steady. We're right at 361 this week, which is basically flat from the 362 last week. However, this is definitely, something we're going to want to keep an eye on. The pending sales are kind of holding steady, as well as the sold sales. We're getting interest rate drops, so we should see some more buyers start to enter the market, but we're also going to be entering our season here in Southwest Florida, so that's also going to mean a lot more inventory as well. A lot of the sellers that may be listed at the beginning of the year, maybe they had their house for sale last year, maybe they didn't want to sell over the slower summer market. They're going to want to be looking to get their property back on the market come wintertime. That's when we've got the most, tourists, most people here, most things going on. So that's going to be the prime selling time. So we usually see a pretty big shift of, increase in listings. As you guys can see last year, October, basically late October, we started to get a spike all the way through January, February. So we should see something similar this year. So if you're a seller, you're going to want to see the pending sales and the sold sales go up to compensate for that. If you're a buyer, you're going to want to see this inventory continue to rise without enough buyers for it so that you can get the best deal possible. New pending sales is going to be the pending contracts that are written. So as you guys can see, similar to the new listings, this is going to be holding pretty steady over the last couple weeks. However, I would definitely like to see this increase for us to get back in more of an upwards, appreciating market. Right now we're kind of in like a level market right now. We were in a declining market, but we're really kind of at like a standstill at the moment, in my opinion, to see whether that down market's going to continue or whether we're going to, be stable for a while or end up, turning the other way and be back in that appreciating market. So again, if you're a buyer, you're going to want to see this number get as low as possible. You're going to want to see the listings be as high as possible. That's going to give you the most options, the most negotiating power, the most incentives that you can negotiate for, all of that good stuff. And if you're a seller, you're going to want to see these pending sales go up. You're going to want to see the sold sales go up, and you're going to want to see the new listings go down. Just simple supply and demand. The less competition that you have when you're selling, the more likely a buyer is going to be to choose your property. And then same thing on the flip side. If you're a buyer, the more inventory that's available, the less you have to compete with the other buyers for it. Active inventory, so this is going to be the total number of active listings on the market. This has gone down pretty substantially, so this is something that I'm curious to see where we're going to end up with a lot of these. A lot of these were what we called phantom listings, so they were sometimes they were pre-construction, new construction, things that weren't even built yet. A lot of times they were people who were still they're listing in March of 2025 at a March of 2022 listing price. So they're, 100, 150, 200 grand over the current market value. A lot of these people realize like, hey, this isn't really the market to do that kind of thing. Let me take it off. I don't need to sell. I don't have to sell, whatever the case is. So we have gone down a pretty bit in the total number of active inventory on the market. But a lot of these people could come back as well. So as the market improves, a lot of these listings could come back. Some of these people could decide like, hey, I actually do really need to sell. I'm going to drop my price. So we definitely want to see, if you're a seller, you're going to want to see this inventory continue to drop and then new buyers continue to enter the market. Again, if you're a buyer, you're going to want to see this spike back up so that you can have the most options available to you. Supply of inventory, this is going to be the amount of weeks of inventory. So if you take the amount of sold properties and divide it by the amount of total inventory on the market, this is the amount of weeks it would take to sell. A NAR balanced market range is right between 20 to 30. Right now we're at 42, so we're about 10 weeks over what NAR considers a balanced market. Definitely something that we're going to want to keep an eye on. It looks like it's trending the wrong way as well. So like I said, we have kind of been holding with everything, but the new listings are still slightly higher than the solds, which are still, the new listings are still slightly higher than the pendings, which is still, significantly higher than the solds. So if things aren't actually selling, we're not, eating into any of this supply of inventory. Absorption rate, this is basically just going to be the reverse of the supply of inventory. So this is your odds to sell. So out of all of the active, listings on the market, what percentage of them sold? So then that way your house is that percentage likely to sell. pending inventory. So this is one that we want to watch as well. So as you guys can see, there is a pretty big spike here in the last couple weeks. Definitely a good sign if you're a seller. We're going to want to see these pending sales go up. However, the problem is when we go back to the closed sales have not started to actually show that yet. So when we're seeing pendings go up, but we're seeing closed sales not match it, either we're getting a lot of, investor offers, people are just taking offers, and maybe it's an investor, it's a wholesaler that they can't actually close it. Maybe the buyers are just super picky, they're finding things during inspection, they want to back out, find something else. Whatever the case is, like there's some kind of drop off to where even though more houses are going pending, not all of them are closing, and so that's contributing to that high absorption rate and high supply of inventory. So if you guys have any questions about what this means for you or your specific scenario, whether you're buying, selling, investing, whatever the case is, my team and I are here to help you around the clock. Give us a call today or click the link down in the pinned comment to schedule directly on my calendar. Again, I'm Braden Milner here with the Milner team at Florida Future Realty. If any of you guys are looking to buy, sell, invest, we're here to help you around the clock. So if you guys would like to, book a call, figure out how this, looks for your situation, your scenario, what it means for you, feel free, like I said, reach out to us. We're here. Subscribe to the channel, like this video for more content just like this. We upload a once a week market update, lots of property tours, tips on Southwest Florida real estate, all that good stuff. So we look forward to, thank you guys all for watching, and we look forward to seeing you guys all next week, later.